afternoon. You're watching Closing Trades on 80 now. I'm Anisha Jain. With me is Aisha Faridi. And for now, the markets are holding in the green, but not by a whole lot. We're just around the 22,150 mark for the Nifty. And from the highest point of the trading session, we have definitely cooled off almost 60 to 70 points. Let's take a look at the Bank Nifty as well, because that was underperforming the indices for most part of the trading session. Though it's off the lows, but it's still underperforming the frontline index. The Bank Nifty continues to be in the red. The mid-cap and the small-cap indices will come up for you next. Those two are reeling under a bit of a pressure. In fact, the mid-cap index has now given up most of its gains. It's at the lowest point, though small-cap too is at the lowest point of the trading session. So clearly for the broader markets, there's a sudden slip that has happened in the last 10 to 15 minutes itself. Sectorally speaking, it was real estate pack that was doing well, followed by IT. Of course, IT was led by TCS. So these are a couple of sectors that you should have on your radar. But in terms of the other news flow, take a look at the likes of Restaurant Brand Asia, Westlife, even other QSR names like Devyani as well as Sapphire Foods. All of these stocks were trending lower after reports surfaced talking about how the local authorities in Maharashtra are likely to do the surveys at the fast food joints for their food quality as well. So that has put some of the stocks under pressure there. You also have some reaction coming into brokerages. So Morgan Stanley had actually upgraded the target price for an ICICI Lombard and ICICI Pru as well as HDFC AMC. So all of these stocks are in focus on account of that. And lastly, don't miss out Shriram Finance. It's a very curious case right now. The stock, that heavyweight, suddenly slipped 7 to 8% in the trading session. Let's pull up the intraday chart of that one. I tried reaching out to analysts to figure out what really transpired, because remember, Shriram Finance was one of the top contenders to actually form part of Nifty 50. There was that sudden scare in the market that perhaps it will not be a part anymore. But I spoke with a couple of analysts who track that, Abhilash of Nuvama, Sriram of IIFL, and both of those guys said that for now, until unless there's a change in the methodology of the way that the Nifty 50 contenders are actually selected, Shriram Finance is still top of the list as a likely contender. So just keep an eye out. We'll of course do more checks on this, but just a very sharp drop that we had seen there suddenly.
Oh yeah, absolutely. And it's still reading under pressure, down about 6% or so. CMS Infosystems, that's recovered from the day's lows after that humongous 27 block deal that happened, wherein the promoter group is the likely seller. TCS holding up 2% after it got upgraded by UBS, and a target price also has been upped all the way to 4,700. Andhra Cement, wherein there is an OFS, it's currently down about almost 7%. Seller World, like Anisha has been highlighting. And then, of course, Vodafone Idea ahead of that board meeting on the fundraise. That is one stock which is under significant pressure as we speak, down about 4.5% or so. There's Happiest Mind as well. The new vertical structure is going to be comprising of 6 new industry groups. That's one stock we've been focusing on. Morgan Stanley has come out with the latest note on ICICI Pru. The target has been now up to 605, and ICICI Lombard to 1875. Both these stocks in focus. And then, of course, Seller World as well, wherein Motilal Oswal has initiated a buy with the target price of 1100, and on Castrol they maintain their buy with a target price of 230. So a bunch of these stocks which are in focus this afternoon. But for the index, it's once again, Kunal, a very sideways session.
Yeah, absolutely quiet. Nothing much for the indices. No major trends, no major signals in terms of the indicators also for the indices, which means that we would probably like to consolidate. And what we are seeing in the last half an hour, last 1 hour of I think a 50-70 point jump on the Nifty, and then a 30-40 point correction for the Nifty, and probably a 100 point, 150 pointer in a similar range for the Bank Nifty. I think it's just maybe expiry volatility which is probably coming back into the indices. Maybe that could be on the back of some juggling of positions, rollover of certain set of stocks, because I think I see one decisive pattern which is emerging, at least in the second half of the trade today so far, is that the private sector banks have started to show signs of recovery. So I think HDFC Bank, ICICI Bank, IndusInd Bank, Axis Bank, the 4 prominent names from the private sector lot, these stocks have recovered from their intraday lows, which was not the case over the last 3-4 days for these stocks. So maybe that could probably be one of the major reasons why you're seeing slight bit of resilience on the private sector banking side, and that slight bit of outperformance which is coming back into the Bank Nifty.
Okay, so that's the take as far as the market mood is concerned right now. Amit Khurana also joins us on the show, and Naresh Mirani is also with us. Naresh, before I go to Amit, let me just quickly come to you and talk about the sell-off that we are seeing in select PSU names, whether it's an NMDC, whether it's REC, Shipping Corporation of India, and a lot of other names as well from the PSU basket. They're seeing a bit of a sell-off. What's your recommendation on PSU stocks right now?
So that was the recommendation, say a few weeks back to reduce allocations, cut down, because we had seen a large move across the names, and a 15% correction from the top would be normal after such a rally. And we've started that correction. In some names, we've gone 10% lower from the highs. And then maybe once you go to that 15-20% from the top, that's the time you can look at entering some of the names you like. But as of now, we are still away from that point. So say NMDC, which has corrected to say 222, closer to 200 to 210 band would be an amazing entry point, given that the trend is still pretty strong. So would be waiting out the time and the price correction to continue some more, and then maybe trades could set up over here.
Okay, that's the take coming in on some of the PSUs. Amit, hi, afternoon. Good to chat with you after a while. Just wanted to understand your take on what the entire PSU pack is up to. Having said that, even from the top, we've not seen much of a fall come by, even after today's fall in the Nifty PSC, or for that matter, in some of the individual names too.
Yeah, that's true. I think the kind of performance that we've seen from the PSU pack has been quite stupendous, to say the least, and we were also been sort of surprised. I think the re-rating has been so stark in some of the sectors, but when you look at it objectively from here onwards, I think most of these names across sectors, I believe, capture a fair amount of optimism, fair amount of earnings and valuation re-rating. And in particular, we feel that since you asked for PSUs, PSU banks is something that we're downgraded today. We believe that most of the rally, especially in mid-cap PSUs, ex-SBI, I must say, was largely led by the earnings, which were led by recoveries, very muted credit costs, which we believe has a very high probability of going to mean reversion. So the credit cost mean reverting for 25 and 26 will imply much lower earnings growth. And most of these PSU banks now trade at 1 time plus price to book, which we believe is fair. So therefore, we downgraded PSU banks as a space. Some of these franchises also have very low buffers for any system level shocks. While we are not building that as a base case, but any eventualities that may work out over the next 12 to 18 months, some of these banks are not adequately provisioned for in terms of on their P&L. So therefore, the risks are elevated, as we call it. But then, of course, there are other pockets of PSU universe where we still believe there is value. For example, city gas distribution companies, which we believe are in a much better situation. And we believe market is underestimating the volume uptick that some of these franchises will show. So it's a very stock-specific view that we are taking. But in general, I believe that the re-rating has been fairly rich, and therefore one needs to be more cautious.
Rich, and one needs to be conscious. But any view, Amit, on Shriram Finance?
Well, I think the reaction on the stock, we've been bullish on the stock, so let me just put that in perspective. I think the reaction today is more on the inclusion in the Nifty, which I think is there's a lot of version going around the street. So I would probably refrain from giving a view from that perspective. But fundamentally, we've been more bullish on Shriram Finance than some of the other CV financiers.
About Shriram Finance, you're bullish on that stock. But separately, what's the view on Vodafone Idea and the telecom sector as a whole? The fund infusion is being talked about, but would it be material enough to change the fate of the company? One should question.
That's right. So we don't have a rating on Vodafone, but from a telecom sector perspective, I think this is one name which has had a very, very serious, structural challenges. The management has been pretty committed, and of course, then the government support came in. So we've been backing up Bharti, which still remains our preferred pick on the sector. I think the level of the fund infusion and of course the time that it will require for this franchise to turn on is considerably longer, and therefore we've been sort of keeping it on the sidelines. So Bharti is what we played on the telecom side.
On that note, we are going to take a very quick break, just counting down to the Vodafone Idea board meet as well and the outcome. Stock, of course, under pressure. We'll take a break, continue tracking markets on the other side. Closing trades right here in ET now. Let's just take stock of what the closing trades are settling in at, and just pretty much sideways. It's been a very narrow band, irrespective of those jagged edges that we've seen on the index for ourselves. And once again, the action is outside the index because pretty much all the liquid movers are part of the losers or, for that matter, the gainers list. Shriram Finance still down about 5%, Idea down nearly 5%, REC is down 3.6%, Hindustan Copper is scaling lower by nearly 4%, and NMDC as well has seen a sharp crack. It's down about almost 5% as we speak. On the gaining side, though, there's ICICI GI, there's Havells, which is up about 3%. Tata is scaling up nicely today, about a 2.5% traction there. And then, of course, there's JK Cement as well, which is holding up 2.3% as we speak right now in trade. But still in conversation with Amit Khurana, Kunal Bothra, as well as Naresh Mirani. Amit, just wanted to understand, what are your positive biases in the market right now, sectorally?
Well, they haven't changed really much. So we're still bullish on some of the discretionary consumption categories, in particular real estate, where we believe that the demand traction is extremely strong and largely consumption-led demand. So that has its own sort of ramification. We have been bullish on cement, except for the caveat that the near-term valuations look pretty stretched. And I think the market has been pretty optimistic on volume numbers, whereas we have been slightly more, shall I say, more conservative, but even then the sectors remains one of our favorite sectors to add to our positions on every dip for that matter. Banks have been very bullish, but I think the markets just seems to keep derating the franchises because of concerns on NIMs. And this entire higher interest rate regime, which earlier we thought will possibly start unwinding from June onwards, but the latest policy from the NPC seems to suggest it more moving towards August as the first rate cut scenario. And therefore, the concerns on banking names continues to play out on the negative side. But we believe that the sector is in for pretty reasonable, attractive valuations, especially the frontline large cap banks. When I said earlier, it was more on the PSU banks where we feel the valuations are a little on the higher side. But on the frontline private sector banks, we remain extremely bullish. Then, of course, some of the other sectors which show some initial signs of bottoming out, but we are not yet upgraded them. We are still neutral. But chemicals is one space where we believe that largely the inventory corrections, the pricing corrections are very, very much captured. And hopefully over the next quarter or two, we'll start seeing better evidence for us to upgrade the sector at large. But at this stage, we are still neutral.
Okay, so that's a view coming in on some of the top bets right now. Just taking stock of some of the other big buzzers today. You also have Intellect Design, which is actually up 8 to 9%. They did announce latest tie-up with respect to the artificial intelligence business. So that stock is in focus. Action Construction is also higher, and so is BEML. And both of these counters are interestingly in the space of construction equipment manufacturers. In fact, if I can take it across to Naresh and get a sense, BEML as well as Action Construction, any favorite?
So both these names have done really well. BML still looks interesting because it had it got through this correction from say 3,900, 4,000 levels, corrected all the way to 2,800, a good 20-30% correction from the top. Slow and steady recovery now. So that's a stock which one can actually place a stop loss somewhere closer to 3,100 and still be long on. Action Construction, the problem is the stock has been in a one-way uptrend all through the last 1 year. We've hit a new 52-week high, all-time high even today. But the risk reward is not great. We could, at some point of time, be getting into a pause on that one. So if one has to look at it, BML still looks interesting.
Within the insurance bag, Ahmed, do you like anything? Whether the general insurance or the life insurance? Because whether it's HDFC Life, whether it's ICICI Pru, ICICI Lombard, they're all seeing quite a bit of upmove today. And LIC too had finally reached that 4-digit mark.
Well, we don't have formal ratings on these stocks. We don't cover insurance formally, but I think there has been some news flow which has been sort of suggestive of a government taking proactive measures to increase insurance penetration. So we've seen some level of client level interest, but officially we do not have a stance on any of these franchises.
So you don't have a formal coverage as such on insurance, but in terms of the other movers, Senco Gold is higher. Happiest Minds, as we were pointing out, is also reacting to some of the updates there. But in terms of TCS, that stock is actually inching higher by 3%. What's the view on IT sector right now, Amit? Do you think the note that came this morning from UBS talking about how TCS can actually lead versus the peers has some credence?
Well, yeah, we've been sort of debating this internally as well. We're still neutral. IT was another candidate which we were looking to do a potential upgrade, but our take is that the evidence does not still point out towards a towards the potential for an upgrade. But I must make a distinction here. We believe that the large caps are in a much better position. In fact, our view on mid-cap IT still continues to be negative, considering that the PEG multiples are closer to 2.4, 2.5, in some cases even 3 times. And therefore, we've been sort of wary of mid-caps in particular. But large caps, I agree, at a certain price point, it will be an interesting one to look out, especially considering that they have underperformed and largely the narrative has been captured to whatever extent the concerns were. But at this stage, we're still neutral. Rather than playing the IT, we're playing more on the digital themes. Some of these names which are more domestic stories, so to say, on the B2B side or on the digital side.
That's the take coming in on TCS, which has got an upgrade from the house of UBS earlier today and upped the target price as well. But Amit, have to ask about what is it that you're making of the ongoings at Paytm right now? I mean, Vijay Shekhar Sharma resigning as part-time non-executive chairman at the PPBL board. So, sort of clearly giving an indication that, he's not got all his claws into the company anymore. And, if need be, he's willing to step down.
Yeah, I think these are developments that we've been watching very closely. Paytm was one of the stocks which was in our preferred picks universe, but we took it out this quarter. I think there were 2 reasons for that. One, the level of uncertainty on the regulatory front now raises the risk element for the entire franchise significantly. So therefore, we took it out. And then, of course, these developments, which will probably have a bearing as to how the investors perceive the Paytm as a business model, and the entire management initiative to make sure that the growth sustains on the other parts of the business. I think there are some other developments which are also likely to come in the public domain as per the management guidance, which will give a sense as to how the move to the third party banks will work out. And I think that will be an important development from our perspective also, because if that transition works out seamlessly over the next few months, then I think the confidence may return to the company, and therefore the risk premium that the market is today demanding on this as a franchise may sort of normalize. But at this stage, I would say that the regulatory overhang will continue to sort of keep the performance a little capped. And as we go along, one will have to revisit the entire hypothesis. We have yet maintained our buy on the stock, but the preferred picks universe, it is out of that. That's a clear mention I want to make.
Can I completely avoid trading Paytm because of the acute news flow and the one circuit up, circuit down days?
Yeah, absolutely. I think the stock has not yet formed a bottom, and in fact, had it been a very positive news flow for the markets in terms of anticipation, the volumes would have been significantly higher for the stock, but it's not the case so far. There was a mild downtick for the stock when it opened, and then it recovered. Had come back towards 430, 433 if I'm not wrong on intraday basis mid-session, and then from there it's come back to the negative territory. So the volumes are a lot more abysmal for Paytm, and that generally is not an indication that a bottom is not in place as of now for the stock price. So would completely avoid the stock.
Okay, let's just bring up the stock price of Whirlpool as well, because the global CEO was quoted as saying that they've taken down their stake to 51% in the company right now, while they're positive on India long term, but stating that if their share is at 50 times multiple, they don't expect it to be much lower than it's an asset arbitrage. So clearly indicating that valuations do matter, whether it's the promoter entity themselves. Amit, Whirlpool aside, which of course has now sort of risen up from the session lows, but where is it that you're seeing valuation peak within the market?
Well, it seems to be across the board, I must say that. In fact, you see PSU pack, we discussed this earlier, you see some of the mid-cap companies, whether it's domestic consumption, whether it's hotels for that matter, retail, jewelry. Of course, footwear has not done so well, so they seem to be at the bottom rung of the entire curve, but the earnings are not supportive. I think it's very difficult to decipher beyond a level, because this market keeps buying into dips. My sense is this, that at the Nifty land, you will possibly look out for a double-digit correction. That's been our call, which we published today in the strategy piece. We believe that a broader correction of up to double digits on the Nifty should be par for the taking. And within that, you will see some of the sectors probably correcting more. Banks seems to have largely corrected. Consumption, domestic staples in particular, seems to have largely corrected. But some of the other categories which have done absolutely well, for example, hotels or for that matter, jewelry, some of those discretionary consumption stocks Autos, for that matter, have done pretty well. So those could possibly have a higher level of correction. And any dips, again, we intend to add to the positions. That's been our stance. But at this time, I think some of these categories look pretty richly valued.
If I have it right, Amit, you're saying that there could be a double-digit correction in certain pockets of mid-cap and small-cap, right? That's what you meant.
That's right. And at the Nifty as well, we called it out today.
Oh, double-digit correction in Nifty as well. That's quite
double-digit
stark. So you're
means
expecting
the
that it could go
double-digit
below
is the higher end.
20,000 at some point of time.
No, so the point we are trying to make is that 8 to 10% is a par for the course. Also look at it in the context that in the last 12 months, Nifty has done a fabulous run. I mean, we have gone up by almost 25, 27% returns on the indices, larger indices in the last few months. So 8 to 10% correction is definitely a par for the course. That is what we believe will make these entry levels pretty attractive and some of the individual stocks attractive enough. Remember, we're still quoting at a significant premium to the long period averages. Now, a long period average, all these things have come into play on expectations of a third term for the Modi government, continuation of the PSU cycle, the re-rating cycle, which is continuing right now, and a whole lot of other positive optimism captured. And a large part of that was also the fact that the interest rate cuts would start sooner than later. I think all those factors have been largely captured. And there are now, situations where one may build in a situation of a rate cut happening not in May or June, possibly in August. All those sort of revisiting those hypotheses will play out and possibly trigger an 8 to 10% correction is what we feel.
Naresh, do you see that on the cards for the index?
So as of now, it's too early to call, and trying to call a correction for the last, say, the longest period has been a problem. And even in the correction, there have been spots. So it's been a market which has been rotating. So if you look at 2021 to 2023, we corrected last year in March, but even in that period of, say, September, January 2021-22 period, there were sectors, there was a PSE, there was capital goods. So my view is in the correction also, there could be spots which could do well. So as of now, once we start breaking some price points, we start looking out for a correction. But my view is even in that, we'll continue to have a rotationary market wherein there could be different sectors which could do well.
Okay, sector churn, that's going to happen. Thanks, Amit, for joining us today with that take on the market and individual stocks and sectors. But slipping into a very short break with the news flow that we're close to the highs of the day, 22,200 thereabouts. Welcome back. Well, the global markets are pretty much flat at this point of time. No major cues coming in from there, and ditto can be said for the Indian markets as well. Not a major move is what we have seen. But global experts, Indian policymakers, economists and industry stalwarts will all be in attendance at the 10th edition of Aditya Birla Sun Life Mutual Fund Voyage. Collectively, they'll dissect investing opportunities in a dominant Bharat. You don't want to miss it. Stay tuned to ET Now on Wednesday, February 28th as we bring you all the coverage live from Voyage. In the meantime, India is seeing a middle-class revolution right now, says the market veteran and BSE member Ramesh Damani. In the latest edition of ET Now on the Go, Damani says India's bull market is quite evident amid the several tailwinds that we are witnessing. Listen into a slice of that conversation.
We are going through a bull market, as Homi Kharas points out in his new book about the global middle class. He says the global middle class started with a few 100 million people in Victorian England, and now I think by 2030 there'll be 5 billion people in the middle class. And I think the next billion people are more likely to come from India than China in the middle class. So the middle class demands financialization of savings, better education, action on climate change, so many things. So it's the middle class bull market that is leading it. And every bull market has its own thesis. For example, you recall when we first met in 2000, there was a big bull market in TMT stocks. It was presaging the age of the internet and presaging the age of zero communication costs. And you know what happened to those stocks at that time. And after that time, the bad ones got weeded out, the good ones continued to form. I think what we're experiencing now, perhaps, is this great middle class revolution. I think this bull market we call the middle class bull market in India. I think that will create prosperity, wealth of a dimension that we're not yet familiar with. Another big city which is as buzzing and as exciting as Bombay happens to be Tokyo. And if you remember in 1964, India won the Olympic gold medal in the Tokyo Olympics. But that time Japan was a beaten third world country. Over the next 30 years, the Nikkei went from 1,000 to 40,000. companies that were not well known outside like Sony, Honda, Hitachi have now become well known companies. So the India bulls, which include me by the way, Nikhil, believes that India is on a similar trajectory, that over the next 25 years, as Japan went from a third world country to a first world country, Indian economy will go from a third world country to perhaps the third largest. So we are very hopeful.
Okay, Devin Choksi as well joins in on the show right now. Devin, hi, afternoon. Good to have you on the show. I guess all eyes on Vodafone Idea, what the quantum of the fundraise is going to be, whether it's going to suffice for the large debt on their books, and more importantly, whether the promoter entity or the government is going to participate.
Yeah, Aisha, good afternoon. Well, I think that's a big question. I think who will participate? Uh, as such, I think the Vodafone has written off this investment as far as India is concerned from their books. Government continues to hold the dominant share, and I think that is where probably I think we are likely to see some amount of participation coming in from government side. Uh, as such, I think currently the debt is about 2.25 lakh crore in the books of Vodafone Idea, and that's a huge, significant sum of money. At this juncture, as we read the business, I think it's a make or break situation. Unless you infuse new funds and create the business for the next generation, I don't think that I think this business will continue for a longer period of time. The more important aspect about the creating the broadband network, I think through the employment of the fibers, I guess I think that is something which is a big time missing at this point of time in Vodafone Idea. So how exactly they will pump in new funds, how exactly I think this expansion activity would take place, capitalization takes place, I think it will be an interesting play to watch out for. So I think one will have to look at I think what exactly the outcome from the board meeting is, and then probably take a further call on the subject.
Situation it might be, but I wonder how much can they raise to make sure that the debt that they have on the books, which is over 2 lakh crore rupees, is serviced. So that's the big game. The stock is at the lowest point of the trading session, is seeing a cut of almost 6%. In fact, however, having said that, for rest of the markets, we have seen quite a bit of recovery. In fact, Nifty has recovered almost 150 points off the session lows. The Bank Nifty is up almost 250 points from the session lows, and a lot of individual names are actually doing quite well, with Tata Motors now leading the charts with a gain of almost 3% on that one. But Devin, I also wanted your view regarding the entire QSR space, and this week it has been marred by that entire commentary that came in from the Maharashtra FDA as well, talking about how they're likely to do more surveys and tests on the global fast food chains to maintain the food quality as well, and we'll play that bite shortly as well. But within this, do you think these stocks are actually providing a buying opportunity, whether a Restaurant Brands Asia, a Devyani, a Westlife?
So I think each of these companies have one good thing about the businesses. They continue to attract the new customers, and as we see the larger number of professional employed customers, at the same time, I think more amount of students. I would think that I think the business continues to do well for this QSR format, and I believe that I think that will probably be order of the day. Like if you look at the places like Japan, where people end up eating more outside food than home food. Similarly, the situation is strongly emerging now in some of the larger cities where the people are professionally employed into different activities, and as a result of which, I think the for sourcing of food or for food requirements, I think they would depend on this kind of a format. So I guess I think the opportunity-wise, the size of the market is quite big. I think undoubtedly so. And if the quality parameters, the check that we are talking about, if that gets in, then probably I think the confidence level of the people I think will remain relatively on a higher side. So hopefully I think things are moving in that direction. Maybe I think some of these companies are showing larger amount of growth opportunity, and that is where probably one would buy them whenever I think market gives opportunity on a corrected price levels.
See, once it is came to our notice and we have given some orders which were complied. So now our whole department in the leadership of our minister, Sri Dharmarao Atram, we are going to have once again to check all the outlets of all the food joints, including McDonald's and other chains also, and we will see that whether they are strictly adhering to the standards given by the food safety standards of India.
Okay, that's the Mumbai FTA Commissioner talking about, most companies, or rather the need for companies to maintain healthy food standards. In the meantime, look out for Vodafone Idea, because that's slipping really, really fast. It's now down about 6% as we speak right now. So it's taken quite a bit of tumble. There's, of course, the metals pack also, which is under pressure. And then, of course, HDFC Bank, the underperformance continues. It's just barely, I think, holding that 1400 rupee per share mark. That's HDFC Bank in trade for you. SBI as well. It's one of the biggest drags on the index this afternoon. And then Kotak as well, which is sitting on the sidelines. Flat for Reliance too. That's also not seeing much of a move really. At 29.78 is where that stock is right now. But Devin, since you track Reliance closely, where do you think the next set of triggers would come in? Because now the momentum seems to be in favor of the stock price move at least.
So I think the areas where the unlocking of the value is expected to happen will be two matured businesses. One is Geo Platform and second is Reliance Retail. There, the first level of unlocking in the values could happen, wherein these companies could separately get listed and traded. Geo Financials has already become a separate company out of Reliance's fold, and I think it has created a value proposition for investors. The renewables, which is getting into commercial act somewhere in this particular calendar year 24 or financial year 24-25, I think would be next in queue as far as the unlocking of the values are concerned. And each and every space in which they operate, including the media space where they operate, probably I think they are forming a larger size, which is now suggesting that the growth is going to be more sustainable and with a larger amount of size that we are talking about. So overall, I think Reliance per se in each and every vertical remains, I think, absolutely strong as far as I think their growth rate is concerned, their business is concerned, and adoption of the new environment and the technology is concerned in each of the verticals.
And Kunal, what's your view on Bector's Food? That's seeing quite a bit of slip at the moment, and Tata Motors, on the other hand, is making fresh highs for the day.
Yeah, so Bector Foods, I think, is a stock which is going through now a correction. The last 1 month, if I'm not wrong, the stock had fallen from 1200 to sub 1000 levels. From 1000, the stock had bounced back towards 1100, 1120 mark. I think that was the high the stock had made on an intraday basis today or maybe yesterday. And from there, it's now back sub the 1100 mark for itself, which means that potentially the bounce for the stock in the near term is now behind, and you may see the stock getting into a bit of a corrective phase. So I think the 50 DMA now remains to be a key trigger point for the stock price for Bector Foods. If the stock happens to break past about the 50 DMA, which is at 1120 mark, then we may see some sort of revival coming back into the stock. But unless it fails to break over and cross above those levels, I would expect the correction to continue for the stock over the near term. Tata Motors is something which I've been bullish on. In fact, had recommended this with a target of 980. Would still be bullish on the stock. In fact, on the hourly charts for Tata Motors, it's formed a classic bullish pennant formation. It's almost a 40-50 pointer formation for Tata Motors, and the breakout was closer to this 950 mark. So I'm expecting the stock to come back towards 985, 990 at least over the near term, which is maybe over the next couple of days. You might see at least another 25 to 30 pointer up move for Tata Motors.
Okay, point taken. So Tata Motors is something to watch out for. Naresh, what's the view on metals? That stock is that space is actually coming under pressure. And there's a dichotomy. The steel stocks are doing okay. So a JSW Steel, a Tata Steel is okay. But Hindustan Copper, Nalco, Vedanta, they're all under pressure.
Yeah, so we are seeing diverging moves across the space. But even in the names which are doing relatively better, the momentum is not catching up. So Tata Steel continues to be at 140, 145. You have Jindal Steel continuing to be between 760 to 800. So overall, we are not seeing a sharp move on either side on in terms of momentum. So the correction is also not very deep in the Nalcos and the sales of the world. So overall, time to be more stock specific as such and wait for some more time on the metal pack. The momentum did not continue. So if we cross, say, 148, 150 on Tata Steel, then maybe we'll start looking at it 800 above Jindal Steel.
Okay, that's the take coming in on some of the metals pack, which for sure is seeing a fair amount of pressure in today's trading session. Devin, before we let you go, let's have a few buy or sell calls from you, some top ideas.
Well, I think we remain relatively more watchful at this point of time because somehow that we believe that I think the market has run up I think significantly in the recent times. So selectively, the approach continues to be into the space where we are finding ourselves comfortable, which is auto and auto ancillary currently. We believe that I think this is one area where probably you are likely to see a major amount of growth going forward, particularly in auto ancillary. So that is one space we continue to remain bullish on. The other areas where probably I think we remain bullish is about the travel and tourism segment, where again the growth opportunity factor I think remains absolutely more and strong. The financial space in which I think some of the NBFC companies, including some of the banks, and they are relatively I think more comfortably placed at this point of time because market is possibly I think chasing some of the other growth momentum stocks, whereas I think these companies with a strong fundamental strength inside are available at a valuation which is relatively becoming more attractive now. So we try and play the market today by buying the stocks which has a long-term potential but available at a corrected valuation. So that is our approach currently.
Okay, so that's a take on some of these other buzzers as well. But for the markets, it's more of the same actually. From the frontline index, it continues to be Tata Motors, TCS. IndusInd is actually perking up a bit, but I don't know how much credence to give to that because it's been one day up, one day down for such private banking names. But Naresh, within this private banking space, which is the stock which has the highest amount of risk reward on the table?
So, in terms of risk reward as well as momentum, it has been ICICI Bank recently. Sustaining above that 1050 mark does not correct much with a dip also in the Bank Nifty. So, that's the one which is showing relative strength. The other names would be an Axis Bank, which still looks promising. But the momentum has still not picked up in the private banking space. So, the best relative stock as of now is ICICI Bank.
Okay, in the meantime, all eyes on Vodafone Idea and the board meeting, which is slated today. In fact, ET Now sources are gathering something on the board meeting. Let me take it across to my colleague Anurag Joshi and find out what he's picking up from his sources.
So, Vodafone Idea's board is meeting currently at this moment to decide on a fundraise plan for the company. Now, our sources are telling us that it is very likely that Aditya Birla promoter entities are likely to put money into the company as equity capital. Now last year, a promoter entity had assured funding support to the company or to the tune of up to 2,000 crore. Besides the Aditya Birla promoter entities, the Vodafone Idea is also likely to draw money from banks and has been in talks with banks for debt funding from them. And there had also been talks going on for an investment from an offshore investor, but the status of those talks are not known, and we will get more visibility and clarity once the board meeting is over.
As it is heard from Mr. Kumar Mangalam Birla just a couple of days ago when he was talking at the launch of their paints business, Birla Opus, wherein the press colleagues of mine were asking the question, what about Vodafone? Because that's, of course, one of the weaker links of the entire group. And he categorically mentioned that they're very committed to the business. They have been speaking with external investors to get an interest. In fact, if we have that bite, maybe we should play it along because that was the important commentary. And that day as well, we had seen a reaction on the stock. But if I can come to you, Kunal, in the meantime, to get a sense on the Vodafone stock. I know we have discussed this, but to add to that, let's also talk about Airtel. How's the chart of that one looking?
So I think Bharti Airtel is a much more better chart. Of course, the stock has gone through a 100-point correction. So I think in the last 3 weeks from 1200, the stock had come back towards 1100 mark. Consolidated at 1100 mark for I think 1 week or so, maybe 3-4 days. And then from that 1100 levels, the stock is gradually showing a bit of a bounce. So a 2%, 3% bounce so far is shaped up for Bharti Airtel. But the entire scheme of the last 100-point correction and then a time-wise consolidation establishes a good support at this 1100 range for the stock. So that would probably be maybe a stop loss or a support point for the stock for someone who's holding on to long positions for Bharti Airtel. Vodafone Idea, on the other hand, I think even though the stock has been a lot more volatile, but the only thing which is missing in this last 2 days of correction for the stock is the volumes, because 2 days back when the stock had run up from 15.5 levels to I think 17.5, 18 plus mark, the volumes were exceptionally on the higher side, and the volumes in the last 2 days of correction is a bit lower for the stock price. So maybe that this could just be a mean reversion for the stock and not be a major trend reversal for Vodafone Idea.
Okay, in fact, here's that sound bite of Kumar Mangalam Birla, who spoke about the group's plans for Vodafone Idea during the launch of the paints plant in Panipat.
We remain very committed to Vodafone, and like we've said in public domain, efforts are on to get outside investors.
Okay, remain committed and will also seek outside investors, not reflecting in the stock price their enthusiasm, while of course it's climbed up quite a fair bit in the last 1 month or so, Vodafone Idea. But right now the stock is at the lowest point in the day. It's fallen over 6% as we speak right now. So closing in pretty much at the session lows, sub that 16 rupee per share mark. That's where the stock is. The big star performers today have got to be ABB, Havells, TCS after that upgrade coming in, and Tata Motors, which is closing in at the session highs with a 3% move. There's IndusInd, Bharti, M&M, which has held out very smartly. iShares has done well. L&T after that big 3% move follows it up with another 1% in trade today. And then in bits and starts, you've seen in ITC, Britannia, Nestle, some of these FMCG plays as well are springing back in action. But Kunal, still pretty divided when it comes to private banks, right? Because even though HDFC Bank did see a little bit of a rebound after its 52-week low, nothing material of a follow-up from there.
Yeah, so it'll take a lot of time for I would say conviction buyers to come back to HDFC Bank. What has also happened is in between that, now it's the expiry week, so there's bound to be a lot of action in terms of the rollovers. And I maintain the point, I think a couple of days back, which I mentioned, that if in case there is lack of short rollovers for HDFC Bank, which was the case for the stock in the last 2 series, specifically the previous series, the month of end of January, start of February, I think that's the important trigger to watch out for, because a lack of conviction from short sellers to try and carry forward their positions would really result into the stock going into a much more bigger and a stronger momentum-wise breakout for itself. So right now what we've seen is a good 60, 70, 80 point recovery for the stock from those I think 13, 60, 65 levels to 14, 50, 60 mark where it tested a few days back. It's consolidating, but I think the next leg of breakout could probably be deciphered once we see a proper analysis in terms of the open interest. But amongst the private sector banks, we've also seen one more trend emerging, that the likes of ICICI Bank is trying to make a comeback again towards the previous highs of 1070, 75 mark. So I think it's the 4th or the 5th attempt for the stock to try and break past above those levels. So completely different chart altogether, but a lot more stronger as compared to rest of the other weaker private sector banking names.
Okay, point taken. So a lot will go in the process of making that HDFC Bank has finally bottomed out. But in the meantime, BEML has perked up a good 10%. Jamna Auto is up 8%. BSE is actually doing quite well on good amount of volumes. And Policy Bazaar, that's the other one that has been inching higher. In fact, Naresh, on Policy Bazaar and Delivery, both of these stocks have been trending higher in a very, very consistent manner. Of course, there are sideways moves, but the chart trend seems to be on the upside. What are the levels to watch on Policy Bazaar as well as Delivery now?
So on PB Fintech, the trend has been pretty strong. Now we get into further levels at 1200 to 1300 is a major problem zone, because that is where it almost traded after getting listed. So the full recovery is done. So I'll be a little more careful here. Look at booking profits. Delivery, on the other hand, looks promising because it's gone through that phase of 12 to 18 months of consolidation. It had 2 attempts above that breakout above 450, did not work out. Today also it has pulled back after making a breakout move. But overall the structure looks interesting, wherein eventually the stock could go to that 600, 650 mark. So out of the whole new age name, Delivery now comes into the list.
Okay, that's the take coming in on both PB Fintech as well as Delivery. Let's just see what we're closing in with, while it's pretty much under pressure for the entire private banking names, barring ICICI Bank, which is just barely managing to hold on to the green. Asian Paints actually has seen a bit of a recovery come by after that 4% cut that the stock saw yesterday post the brokerage downgrades coming in. although it's still closing lower by about 0.5%, so I stand corrected at that. Did make a few attempts at a recovery in the intraday session. Kunal, further pressure you think on Asian Paints, or will it consolidate here for a bit?
Yeah, I would say lack of trend for the stock. So, the bounce which had happened for Asian Paints in the last 1 month was very, very feeble. So, I think the stock had formed a base of 2950, rallied up towards 3030, 3015 odd mark. So, which means a very minor 3%, 3.5% rally for Asian Paints. And then what you're seeing is a corrective wave back again. But again, after the correction, no major follow through for the stock price. So, that tells you the phase of inactivity for traders who are not anticipating any major kind of a trend for the stock price. The bigger aspect to watch out for would be the sudden increase in volumes, which could probably result into a bottom formation for Asian Paints. So, we either see a bullish candlestick pattern like a hammer pattern getting formed for the stock price, or over the next couple of days, if we see some sort of volume triggers emerging into the stock price, that could really establish a stronger case of a major bottom formation for the stock.
Okay, let's get in some BTST trades as well going on that note. Kunal, let's have your list.
So, I'll go with two auto names. Continue to be bullish on Tata Motors, would suggest a buy with a target still kept at 980. Stop loss could now be revised to almost 940 from current levels. And M&M is the other stock which I would be bullish on. Earlier mentioned a target of 2000. So, would maintain the targets of 2000 for M&M. Stop loss could be trailed to 1900.
Right. Naresh, what about your BTST ideas?
So first is a buy on Eicher Motors trying to make a breakout move above 4,000. Stop loss at 3960, target price of 4100. Second is a buy on Tata Communications, continues with follow-up action after the breakout. Stop loss at 1880, target price of 1950.
Okay, and it's over to Vinny then to find out how the markets have panned out in this session today. Vinny?
Absolutely. So it's been a bit of a recovery, at least we could say, came in for the Nifty in the second half of the day, managing to close on near the 22,200 levels, up 72 points, up 0.3% on trade. Sensex 2 managed to see a slight bit of a recovery, so broader benchmark indices, slight bit of a recovery that we saw on that front. But what didn't do well today was the mid and small cap. That was quite flattish, nothing exciting that happened in the mid and small cap space. So yes, the broader markets, nothing exciting on that one, quite flattish when you look at the Nifty mid cap as well, of the day's highest point. Small cap, yes, still nonetheless managing to perform as much as we saw in terms of the benchmark indices, but not an outperformance that we've been seeing. Let's pull up some of the names in the Nifty 50 that managed to see strong gains. One is obviously we have Tata Motors, that is the top Nifty 50 gainer today. So yes, that's holding out a strong gains today of around 2 to 3%. While TCS, that's the one that's doing quite well from the IT pack, given that UBS has upgraded TCS to a buy from a previous neutral rating, upgraded the target price that we saw coming in, and TCS managing to close near almost the day's highest point as well. Let's also see IndusInd Bank, that managed to see strong gains, as well as Sun Pharma in the Nifty 50, which managed to hold on to decent gains. What didn't do well today was Bajaj Finance, SBI, as well as DV's Labs, all of them sulking in trade. So Bajaj Finance, SBI and DV's Lab, nothing interesting on that front. Let's pull up Dixon Tech, where that is managing to close on to, because we did have a downgrade that came in for Dixon Tech from Jefferies, and Dixon Tech was in the red all through the day. That's one we're watching out for, closing in the red as well, down almost 2.7%. Havells, that's the one where we saw an upgrade from Goldman Sachs, so that was a bit on the positive side. Havells as of now also holding on to 3% gains on that front. A lot of block deals, so whether you look at Devyani International, CMS Infosystem, all of them were in focus today on the back of that. From the cement pack, we did have JK Cements, which is holding on to some bit of a gain as well. So yes, that's how the market setup looked like. A lot of brokerage notes keeping the stock abuzz, but markets managing to close on to the 22,200 levels. Nothing exciting in the mid and small cap space as well. An advanced decline ratio today in the favor of decline. That's the wrap for today's edition of Closing Trades.